The strange thing about government debt isn't that it just keeps getting bigger, it's that almost nobody expects it to be completely paid off. The United States owes tens of trillions of dollars, Japan's government debt is larger than twice the size of its entire economy, and countries across Europe, Asia, Africa, and Latin America are all carrying significant debt. And yet governments just keep on borrowing, investors keep lending, and somehow the entire system continues operating. So who exactly do governments owe all of this money to, and why would anyone keep lending to a country that is already buried in debt? And what happens when the bill finally comes due? To understand this, forget governments for a moment. Let's say your town needs a new bridge. That bridge costs $100 million, but the town doesn't have $100 million sitting in a checking account. It has one of three options. 1. It could dramatically raise taxes today. 2. It could wait 20 years and slowly save the money. Or 3. It could borrow the money, build the bridge now, and repay the cost over time. The third option often makes the most sense because people will use that bridge for decades. Instead of making today's residents pay for the entire thing, the cost could just spread across many years of future taxpayers who will also benefit from that same bridge. Governments borrow for the same basic reason people take out mortgages. Very few families save enough money to buy a house outright. They borrow because the house provides value immediately while the cost is paid gradually. Except governments aren't just borrowing for bridges. They borrow for highways, schools, military equipment, healthcare programs, pensions, unemployment benefits, disaster relief, and sometimes just to keep the lights on. Whenever a government spends more than it collects in taxes, it runs a deficit, and debt is simply the accumulation of those past deficits. Think of the deficit as the amount added to a credit card this year. Government debt is the total balance already sitting on that very card. But here's where government borrowing becomes very different from your credit card. A government usually doesn't call a bank and ask for a massive loan. Instead, it sells bonds. A government bond is basically an IOU. You give the government $1,000 today, the government promises to pay you interest and return your $1,000 after a set period of time. Some bonds mature in a few months. Others mature in 2 years, 10 years, or even 30 years. And the buyer can include banks, pension funds, insurance companies, foreign governments, investment funds, central banks, and ordinary people. So when someone says the government owes trillions of dollars, it doesn't necessarily owe that money to one mysterious organization. It owes money to millions of investors holding millions of individual IOUs. And many of those investors actually want government debt. Pension funds need relatively predictable assets to help fund retirements. Banks use government bonds as a place to store money. Insurance companies, they need investments that can produce steady payments over long periods. Government bonds are also used throughout the financial system almost like high quality collateral. They're the financial equivalent of a house with a clean title. You can hold them, trade them, borrow against them, or sell them quickly whenever you need just a quick cash. That creates a surprising situation. Government debt is a liability for the government, but it's an asset for whoever owns it. One person's debt is another person's investment. Your mortgage is a bill to you, but an income-producing asset to the bank. That same $1,000 government bond appears as debt on the government's balance sheet and savings inside someone else's retirement portfolio. So a big question is, why doesn't the government just pay everything back? And the answer is, it's just not how the system works. When an old bond reaches its repayment date, governments often sell a new bond and use that money to repay the old one. This is called rolling over the debt. Picture a restaurant that has operated in the same building for 50 years. Its lease expires every 5 years, but the owner doesn't pack up the tables, sell the ovens, and permanently close the restaurant every time the lease ends. The lease is renewed. Government debt often works in a similar way. Individual bonds are constantly being repaid, but the total debt may remain or continue growing because new bonds replace the old ones. That sounds suspiciously like paying one credit card with another. And for an ordinary person, it probably would be. But governments have advantages that ordinary borrowers don't have. A person has a limited working life. A government can continue collecting taxes indefinitely. A person cannot control the currency in which the debt is issued, but some governments just can. And a person's income probably won't double every few decades simply because the entire economy grew, and government revenue often does. That's why the raw debt number can be misleading. Suppose one person owes $50,000 and earns $40,000 a year. Another owes $500,000 but earns $2 million a year. The second person owes 10 times more money, but the debt may be much easier for them to manage. This is why economists frequently compare government debt with the size of the country's economy. It's called the debt to GDP ratio. A growing country can sometimes carry more debt for the same reason someone earning $200K can usually manage a larger mortgage than someone earning $40K. But here's where things can start going wrong. Debt itself isn't necessarily the crisis. The cost of maintaining it is. When interest rates are low, governments can borrow relatively cheaply. But when rates are high, newly issued bonds become much more expensive. It's like having a huge adjustable rate mortgage. The house didn't suddenly get bigger, the monthly payment did. As older, cheaper government bonds mature, they may have to be replaced with newer bonds paying higher interest. That means a growing portion of tax revenue goes towards interest instead of roads, your schools, public safety, or tax reductions. And unlike a new bridge, interest payments don't create a visible new service. People pay more but may not actually feel like they're receiving anything more. This creates one of the biggest disagreements in economics, because some economics argue government should borrow during recessions, wars, pandemics, or major infrastructure projects because refusing to spend can make a crisis worse. When families and businesses stop spending, government borrowing can act like a backup generator, keeping money moving until the main power comes back on. Others warn that persistent borrowing during normal economic conditions leaves less room to respond when a real emergency arrives. And so that backup generator is useful, but not if you've been running the entire building on it for 15 years. Both concerns can be true. Borrowing can prevent a short-term collapse while creating long-term costs if the debt grows faster than the government's ability to support it. And not every country can borrow under the same conditions. A wealthy country borrowing in its own currency is very different from a developing country borrowing in its dollars or euros. If its local currency falls in value, that foreign debt becomes more expensive even though the country borrowed the exact same number of dollars. It's like earning your paycheck in monopoly money while your mortgage must be paid in actual cash. Countries that investors consider stable can often borrow at lower interest rates, but countries considered risky must often offer higher rates. It's just how it goes. But those higher rates make their debt even harder to repay, which makes them look even riskier, which pushes rates even higher. It's like a traffic jam that creates more traffic. Literally, eventually a government facing too much of this debt has only a few pleasant options. They can raise taxes, they can cut spending, they can allow inflation to reduce the purchasing power of debt issued in its own currency, restructure the debt per se, or in extreme cases, default. There is no secret button that makes the cost disappear. Someone eventually has to absorb it. Taxpayers, unfortunately, they just may pay more. People receiving government services may receive less. Bondholders may be repaid with money that buys less, or investors may not receive everything they were promised. So are governments buried in debt because the system is broken? Not exactly. Government debt is part of how the modern financial system functions. It allows countries to respond to emergencies, build projects before they can fully pay for them, and provide investors with assets used throughout banking and retirement markets. The real question isn't whether a government has debt. Almost all of them do. The question is whether money was used productively, whether the economy and tax base can keep up, and whether investors still believe they will be repaid. Because government debt runs primarily on confidence. As long as investors believe a country, like the US for example, can collect taxes, maintain a functioning economy, and honor its obligations, they may continue lending. But when that confidence disappears, the size of the debt stops being an abstract number. Interest rates rise, the currency can weaken, and budgets get squeezed. Decisions that were postponed for decades suddenly have to be made immediately. Governments don't operate like households, and national debt isn't simply one enormous credit card balance. It's closer to the plumbing beneath the global economy. Most of the time, nobody notices it. Money flows through it every day. But when the pressure becomes too high or confidence begins to leak, problems begin to spread far beyond the government itself. And that raises an even stranger question. If governments can borrow money for decades, roll over old debts, and in some cases issue the currency used to repay them, what actually prevents them from creating all the money they need? The answer is the reason your paycheck can increase while somehow buying less than it did before. With that, I thank you for watching this video. If you liked it, please leave a like on the video and subscribe for more content. Thanks again, and peace.